The stock market was selling off today throughout the trading session, first because the producer price index inflation numbers came out hotter than estimated at 2.4% compared to 2.3% year over year. And then core PPI, which is minus volatile food and energy, came in at a month over month 0.3 compared to 0.2. So not only is CPI inflation accelerating, but PPI inflation is accelerating. So this combined with Jerome Powell just had some remarks saying that the Federal Reserve might not be in a rush to cut interest rates, and that the getting inflation down to 2% is on a somewhat bumpy path. So we might be getting to a lower interest rate at a slower rate now, because we're seeing inflation slightly reaccelerating again, as well as with President Trump and some of his pro-growth policies of tax cuts, deregulation, and tariffs. The tariffs especially could be inflationary, so that's something to keep in mind. Obviously, we have to see when the policies really get released, but it's possible that inflation could accelerate again. So it's prudent that the Federal Reserve not cut too much until they see the realities of the policy proposals on the ground. So the markets are selling off today. They accelerated once Jerome Powell's comments that the Fed's not in a hurry to cut rates were released. Look, I don't think they're in a position to hike again. I think they'll be either slow rate cuts or prolonged pauses. Obviously, we have to see. Look, last week after the election, there was so much euphoria, so much market optimism that it's only fair and it's only right for the markets to have a little bit of a digestion period right now, which we kind of saw the last couple of days. And I think the markets are starting to price in the reality of perhaps less rate cuts. Something else I wanted to touch on, which is a little bit more optimistic, is that Ed Yardeni from Yardeni Research, he's a market forecaster. He thinks that the S&P 500 could hit 10,000 by 2030 due to the productivity gains of AI and the tax cuts and deregulation unleashed under a Trump administration that could bring forward some of the gains. And I kind of agree with him. I think that we're in a roaring 20s scenario, kind of like Ed Yardeni explains. I wouldn't be surprised if the S&P 500 could hit 12,000 by 2030. And I think the NASDAQ, so that's like a doubling of what the S&P 500 is now, because the S&P 500 is slightly less than 6,000. So I wouldn't be surprised if the S&P 500 hit 12,000 by the end of 2030. And then for the NASDAQ, I wouldn't be surprised if it could triple from here. Let's see what happens. But I think we're in a roaring 20s scenario due to the technologically enabled productivity gains. And there's a lot of similarities between that as well as the 90s with the internet boom. I think eventually in late 2030, maybe in 2031, there could be a little bit of a bust in a big sell-off. But until that happens, I expect pretty strong gains for the next few years. Let's stay tuned.